What's up, everybody? That beat goes hard in the paint. All right, so Bitcoin's took out last week's high on the Coinbase exchange, hit an exact price of 53K. Fantastic stuff. If I hover over this candle right here and you look at this number right there, you'll see 53K. Oh wait, wrong candle. There you go. 53 exact to the penny, which is kind of hard for me to think that something this big as far as expensive could do, but it did it, and it does it often. All right, so basically I'm thinking that if Bitcoin's going to pull back, it could do it from here, simply because today's Tuesday and we know that sometimes Tuesdays and Wednesdays can pretty much call the high or low of a week. Now here's the thing, after we tagged that last week's high, we did get a pretty quick pullback, but that pullback hasn't closed on an hourly anything yet. So I got the main resistance levels that you need to see on the chart right now being daily resistance, this lower level here. This is 4-hour resistance, and then last week's high. If you go into the hourly chart, you can see there is an hourly res that would come in around 52,660. So, yeah, I mean, this is a pretty bullish move here. The dollar's getting absolutely crushed. The euro is up 52. In fact, I'm about to get stopped out of a short position here. Took a short position on Euro USD this morning because this price, this white line right here, is the monthly open. So I was figuring if we were going to have downside continuation, the monthly open would be a good spot to take a trade. It's a 1% loss if I get stopped out. So, and it does look like I'm going to get stopped out because, like I said, the dollar's getting absolutely crushed. Since Bitcoin trades with the dollar, you would think that this thing is going to continue higher. Now, in the grand scheme of things, if you pull back like this, you can see this red candle is really insignificant. I mean, it is bigger than, most of these red candles, but it's still insignificant if you think about it, right? Like Bitcoin has moved up pretty far. But the most frightening thing in the world to me, when I think something's going to pull back, is when I make a post that we just took out last week's high in Bitcoin. If it wants to pull back, it could do it here. And then I see a reply like this, no one pulling anything, MFer. That right there makes me almost know that it's probably going to pull back because that dude probably bought at 53K. So just be careful. Whenever I put a post like that, that does not mean that I expect you guys to get short because obviously this thing is bullish. I'm telling you that just to be aware of what's going on. That's it, right? You could see a pullback from here. I have seen it happen so many times. In fact, the USD JPY trade that I took 2 years ago now up there was based on taking out the previous week's high on the US dollar. So, I mean, you know how that trade panned out, right? Not only did it pull back a little bit, it pulled back a lot. But there's a difference here. There was, BOJ intervention going on there. And though the BOJ has been threatening to intervene, this trade is pretty much done. I've closed it on my main accounts and stuff, but it's still left open here for some reason. But anyways, yeah. So anytime, the BOJ starts threatening that they could potentially intervene, then, they could, right? So you got to keep that in mind. And that would affect the dollar. But, weakening the dollar would be good for Bitcoin, obviously, because Bitcoin trades against the dollar. However, if a lot of people sell at the same time and say, you know what, I think it's going to pull back up here, I think I'm going to take profits, then you could see a move like that, right? Wait for the high to get taken out, set your sell order right above that, and then when all the fresh buying comes in for the breakout, sell into it. And that appears to be what's happening here. Now, the daily close is going to be, it's going to be important, because daily res is right there. So if you close above it, then you could see potential bullish continuation. If you close under it, you could see a potential pullback like we got on Friday. It was a Saturday, pretty decent sized pullback, but it ended up getting bought into. So we'll see what happens. No one knows what price is going to do. I just show you the levels and tell you things that I notice when I notice them. This way you guys can make better decisions as to what you plan on doing. All right. Now we all know that the halving is coming up in April. It's getting closer and closer. So, I mean, there's nothing to say that Bitcoin can't continue to trade up when we go into the halving and then, a few days after go to the moon. Nothing in the world can, is what I'm not saying that could happen, right? Or couldn't. Just be careful. You have been overbought for a very long time on the daily. You've been overbought since here, and that's after coming off of this overbought section. So, I mean, it's very bullish, right? It's been leading the risk markets to the upside. It's literally broke out. So, I mean, I don't like trying to short these things up here. But, however, I will throw on a short in times like this. You know what I mean? Because it doesn't matter to me if I lose, right? Because I'm long Bitcoin ultimately by holding it in a cold storage wallet. But when I'm shorting it or going long, I'm just trying to make more Bitcoin. How? By using the link in the description for weeks. You got a few more days left for the month of February for the Trade Talk community only. They're running a 50% off all trading fees deal. But at the end of February, it will go back to just 20% off all trading fees. But there's a link in the description if you want to sign up for that. So far, everything's been good. I have been able to withdraw funds from the platform, and that's what everybody was afraid of. So, yeah, there we go. All right, so moving on. We got Bitcoin doing that. We got Risk. It just opened, and it's opened down $21.53. The expected move for today on the S&P 500 was $22. Here is your expected move on the week, right? Expected move. And something that was funny to me is there is no news this week, very light on the high impact news risk, event risk, and yet still had a pretty much same size expected move as last week. And we had a very high impact news week. All right. So the market's pricing in the same amount of risk, and on 4 days, mind you. This week was on 5 days. This week is on 4. So, I mean, the market's pricing in just as much risk as last week without any news. So I'm going to keep this on watch as well. If we get back down into the lower edges of the expected move, I might try to get long there. I don't know yet because I just have to see how everything else is shaking out. The reason, because we know that the Magnificent Seven or risk, the markets, the tech markets are literally the only thing holding this market up. Not so much Apple, as Apple is about to lose weekly and daily support. It is trying to do that right now. Amazon coming off a little bit. Meta had a slight push up. Didn't quite tag Friday's open, but it's up on the day, at least very little. Google still down on the day. It's got to get, it's up on the day, but it gapped down, so it's down. That's why it shows you that this is negative, is because it's lower than Friday's close. You're still, that's that. Microsoft also pushing lower. Apple and Microsoft are the two biggest stocks inside of the S&P 500. But it's just weird to me that dollar's getting crushed today, and so is risk. Nvidia, this is the big one here. If this thing has a blow off top, then the market's going to take a dump. I don't know how low it's going to go, but it's definitely going to take a dump. And Nvidia is having a pretty significant down day today, being down almost 4%. Keep that in mind. And Tesla, had a nice couple days last week, finding support and then breaking out above this inverted head and shoulders neckline. But we are trading back under that. So this could be, in fact, a false break Netflix pulling back a little bit today. AMD. Now, I know Netflix, AMD, and Intel are not part of the Magnificent Seven, but they are, tech stocks. So there is AMD pulling back kind of hard. Also a chip stock. Intel, however, is up a little bit, but it's not going to be soon. It's up based on last Friday's close because it gapped up. All right. But it's red on the day. Until it gets to here, that number will stay green. So that's, kind of up a little bit, but it's literally the only one. Everything else is red. And then if I pull this over here and show you the futures, here's your ES futures getting killed, kind of. NASDAQ getting killed. Oil pushing up a little bit. And yeah, that's how it looks on the daily for the NASDAQ. So the future's looking pretty rough right now. But like I said, I wouldn't be looking to short it because it's already down. It's already down 27 points. Now, it can definitely continue to go lower. If today's going to be a down day, a big down trending day, then you could expect this to go lower. But I wouldn't like to get short here because you're, $6 lower than today's expected low. So keep that in mind. All right, what's up, everybody? How's everybody doing? All right, somebody asked me a question in Discord, and I just told them, it's easier to explain live. Basically, it's this right here. It's just volume profile, but it's session volume profile. So you go into indicators, pull up technicals, go to profiles, and then session volume profile. One more time, technicals, profiles, and then session volume profile. It gives you the volume profile on the day, each day. And that's, in my opinion, the best way to read volume profile, especially for day trading. All right. You want to see where the majority of the volume is. Like I said on Bitcoin earlier, there is quite a bit of buy volume up at the highs, and that's not what you want to see. I mean, it's counterintuitive. You would be thinking, well, if there's more buying, the blue is the buying. You got 141 by 20 ask. All right. So the yellow would be the sellers, right? The yellow would be the sellers. So you can see that it's mostly buying. You can look at the numbers and see that it's mostly buying up there. And you don't really see a whole lot of selling coming in until you start getting down here next to the lows, because that's how retail trades. They buy highs and they sell lows, and you're supposed to do the exact opposite. You're supposed to buy low, sell high. There's no better sell than last week's high and potentially this week's high. So that's how you get this right here. And it just shows you where the majority of the volume has been traded to this point. This can change and will change because this is the current low of day. This is the current high of day. So you can make a fresh low of day. Therefore, this will change. And this red line, which is called the point of control, it can absolutely move throughout the day. It can absolutely move throughout the day. You can see you got a big spike here, right around that 4-hour res. So like if it bounces back up and trades around here for a long time, this section will stick out further than this section, and therefore the point of control will have moved to the upside. And then if price trades away from that, it's not really a good sign. It's also not a good sign whenever you have a pretty nasty red pullback like this, when the majority of the day has been buying. 4.26 thousand Bitcoin by 3.86 thousand Bitcoin sold. So 4 is bigger than 3. More buying than selling. Because what happens is if you start to make fresh lows, all these buyers are going to get stopped out. If they have stops on. That's the important thing. If they have stops on, which I need to put one on real quick. Let's just do 52,528. 52,528 be the stop loss, and obviously I want all of it. Hit confirm, and send. All right, there we go. That way, if Bitcoin does turn around and go back up, I don't get liquidated like what happened to me like 3 days ago. Or the last time I took a short trade, I made money on the trade, took profits, and said on the live stream that I moved my stop loss to break even, but I never freaking put a stop loss on, and I forgot about it. So obviously that account got blown. Now, it wasn't a lot of money because I only keep trading funds on exchange, right? That's all you're supposed to do. Keep trading funds only on exchange. Money you don't care to lose because you can always add more if you lose it. It was very small amount, though. I mean, it wasn't even 1% of my total account equity or total holdings on this account. All right, so that's that. Bitcoin pulling back looks pretty good. My short is up around there, around 52. Well, no, it's lower than my stop. I got an entry off right around this area here. Right in this area here. 52,470 on the week's platform. So roughly about right in this area. So I pretty much missed the top because I was trying to log in when we were pushing up, but I was also, watching Euro USD and among other things. So yeah, I'm gonna close that D-Dog. I took a long spread on D-Dog last week because we saw unusual options activity on the scan for 140. But then after I set the spread up and I took the trade, I went into the statistics and found out that it was call selling. It wasn't call buying. It was call selling. So that trader traded 8,000 contracts or sold 8,000 calls at 140 strike. 8,000 calls he sold. Or they, I don't know, it could have been a female. But anyways, they sold 8,000 calls up here. Now that just means that they could be long this and they're just selling premium. Or they are hedging their long position. There's a lot of things that could be, or they could, because this would be a high. It's not the all-time high, but it would be a fresh yearly high. They could want to get, put the stock at this price. So who knows, right? But it's losing today because I put it on here on this day. And I don't like to see a gap down, push down. And let's go look. TLT's a little bit up, not much. It did gap up a little bit, had a little push higher, but now it's coming back down a little bit. I think you could bounce here on the TLT. There are a couple other traders that I keep in touch with who think that this is going to go lower, but they're not always right. So I do have new trade ideas also. Let's go talk about those and then we'll get this show on the road. Let me close that D-Dog position real quick. It's because I no longer like it, right? Once I did the research, I put the trade on too fast. Put it on way too fast, so I don't want to take a big loss on that. I should have been more astute in my observations. All right, the new trades that we're looking at is going to be Ford and McDonald's. I like this lower, but it needs to give us an entry. Oh wait, no, this is a long. Yeah, this is a long. Yeah, this is a long. All right, so the area of interest that I'm watching is $12.01, and then the long invalidation or long inval. In other words, when I'm no longer looking to take longs would be 11.59. So if you could set that trade up, that would be like kind of what you'd be looking for there. Entry around $12, exit around 13, right? That would be around your exit point. Basically looking for this to act as support and get a bounce up. Come down, hit this, and then bounce up. And you would take profits at $13. All right, but you're no longer looking for longs if you take this out. I know it's a wide area, so you got to give yourself a little bit of room. But on Ford, the calls are cheap, right? They're very cheap. So it's going to be, and then don't move fast. This is not a fast moving stock. So it is going to be very easy to mitigate the downside risk. You can see we've already had earnings and we've already went through their dividend. So that is a long trade that I am watching. Once again, 1201 is where I'm looking for entries or to buy calls. And then long invalidation would be 11.59. All right, McDonald's. This is a short. I don't know why, but it is. I haven't really set it up right there. All right. So up here is where I'd be looking for a short. I know the moving averages suggest that this is a long, but yeah, it's one of those things. Baby. All right, sorry about that. All right. So yeah, this is what I'm looking for. I'm looking for a resistance test of 297.05, and I would be looking to buy puts or a put spread on McDonald's. Let's see if we can even make one. McDonald's. Yeah, we can make it's not the best. Not the best, but we're going to keep this on watch. All right. Keep this on watch. All right. And then that was it. Those were the two trade ideas that we were going to watch this week so far. All right. So far. I might find more. I might not. Like I said, the moving average structure and everything else suggests this should be a long, but you're into a heavy resistance up here. You did break out, but you failed. And that failure pullback retested this resistance here and then failed again. So you've made a lower low, taking out this swing low and this swing low. So whenever you make a fresh lower low, you just got to watch. Now, a breakout and a daily close above 298 is an invalidation of a short entry. We would not be looking to short it any longer because what that would just be is accumulation. The near-term trend is up, but the long-term trend is up too. So yeah, we should not be looking to short this. But we'll see. We'll see what plays out. We're only looking for a small move because this is a fast mover, right? The options move fast on this. So if we do get that resistance test of around 297 and then it ends up rejecting and we can get into a position, we could be out of it just getting right back down to here, right? As long as we manage our risk the right way, we could be in and out of this thing in the span of a day. Is what I'm saying. It is for a day trade, not a long-term trade. A long-term trade would be waiting to see if it does get a breakout close back above, as that would be all-time highs on McDonald's, I believe. Mickey D's. Yeah, all-time highs. All-time highs. You can see the reason why I like that as resistance there, being monthly res. Yeah, a lot of accumulation here that ultimately failed, but it came right back. So this could be on the verge of breaking out. So it's not my favorite setup. My favorite setup is the Ford one. Did the same thing. We came into quite a bit of resistance here. Would probably be the result of monthly. Yeah. You're right at yearly res. Last year's close. That is an objective price. Oh, that was my long inval. I gotta fix that. Damn it. Quit moving stuff. Just put a new line. All right. So Ford's been struggling a bit. So yeah, but on the near term, I like the trade setup. You're testing the 50 from above, which is good, right? Last time you tested it was here, so it does look like it's running out of steam. But as long as we test the 50 and we stay up in this area, I like it up higher. And like I said, Ford is very easy. It's very easy to trade because its options are cheap. 37 days out, an in the money call is only 74 cents. So you can literally get in the trade with $74. And the potential to make, or the potential for it to get up to 13 would be $1 move. You would almost double your money on $1 move. All right. So let's answer some questions. Good morning. Good morning. What's up, Brian? Good morning, traders. That was me. Hello to the best man at my wedding, Heath Harrington, ladies and gentlemen. What's up, Sloth Bag? Heath hitting 3K perfectly as well. That's awesome. Good morning, Brandon. Sorry. Good morning. Good morning, Michelle. I have low conviction in this, but feels like it wants to go up to test 50s before a pullback to 30K. High 50s. Well, 53,000. Yeah, I mean, it's not bad. We did get that hourly close, and the hourly close does look a little bit better for the near-term pullback. See there? That hourly close, that's pretty big. You took out the breakout candle. So I know this is just intraday, and I don't like intraday traps as good as I like daily and weekly traps, but intraday traps can work well too. Sometimes, not always, obviously. But I mean, $53,000, perfect high test. And then, like I said, also taking out last week's high. Last week's closed a very good weekly candle. I'm just saying, right? Like, this thing could use a pullback. It's been bullish for the last 4 weeks in a row after consolidation, which is good. That's what we want to see. Tons of consolidation and then the breakout. So I'm not looking for this to be the end here. I'm just saying be careful buying up here. All right, that's it. That's it. You can take the short if you want. You don't have to, obviously. I'm only in it to make more Bitcoin. So if I can scalp out, 15, 20% here and there and make more Bitcoin, that stuff adds up over time. It really adds up over time. But I need to make 100% actually, because I have to make what I lost back. Being stupid and forgetting to set a stop loss. But all's good. Set a fresh highly weak on a Tuesday. I mean, it could pull back to the midpoint of last week and I'd be happy with that. That would be a deep enough correction for me. Roughly around 50,000 and then find a low in that point. That would be okay. We don't really have any daily supports down there. I guess one could watch this low and as low as 49,743. That would be support as well. Potential support. Just watch today's close. If you close above resistance, then there's a pretty good chance you're going to see upside continuation. If it doesn't, then you could see it pull back and take out that low. Potentially. Risk is not. The dollar is it might have found a low. We will see. So I'm looking at this basically for this to have downside continuation, but it is much higher than I thought it would go. I actually thought it would roll over at the monthly open. It did not. It has not yet. It still could. It almost stopped me out. I did put a wide berth in there for the stop loss, 25 pips, and I'm only risking 1% of the total account's equity. So hopefully this ends up being the high of day, and then this thing slowly starts to roll back over and continues with the downtrend. You bounced that 23's yearly opening range, 24's yearly opening range, all the way up there. Let's get rid of that one so we're not too muddled up. All right, so that's that. Pound dollar, it's doing the same thing. That's because dollar is getting crushed today. But we just took out that swing low right there, so it would not. I could see this thing turning around. Right? I don't know if that's a weekly low. It is. It's last week's low. So the dollar could be setting in a low right now for the week. I don't know if it is, obviously, but it could be. Right? Took out last week's low, and the week before. Let's rock and roll. Back to the upside. It could do that. We've seen it happen a lot. Doesn't look like it wants to. That was a pretty solid rejection up there at an old swing low. This swing low here. Now, I got 99 high set in there, but obviously there's only been 2 years that the dollar was able to close above that 99 high, and both of those years came right after it. So 2000, 2001, and then you've not closed a year above that price since. So although it's not really been acting as resistance, you can see you got that quarterly break, and then you fell, then you closed another quarter above it, and then you fell. So I just put it in there. I was just trying to find an objective level that wasn't just using this candle's low. But I guess one could do that, right? Get rid of the 99 high and then just use that. It is an objective price. Old support. There's the breakdown. And that's a pretty big candle. I'm going to assume that was on the Fed speech or CPI. It's on Tuesday, so it can't be NFP. And it was in November. So I'm assuming that's a CPI print there. All right. Love it. Let's see here. What we got? Um, Legendary, buddy. Thank you very much, YS. Would not be shocked to see a pullback to 42K and bounce either. Yeah, that's what I mean. Good morning, calendar Fed tomorrow. Tomorrow Fed. It's just the minutes. Johan, it's just the minutes. I would not expect to see anything in the minutes that's going to destroy the market. That's why the market could literally be pulling back today, because they know the minutes is coming out tomorrow. And if it does come out, it's probably going to show that there is not going to be a rate cut in March, which the Fed has pretty much already said that. Right? They've basically already said that there is not going to be a cut in March. They've literally taken the March cut off the table. So here you go. Probabilities for March Fed 2024 meeting. There's a 91.5% chance that we stay at the current interest rate, which is 525, 550. In fact, they don't have they don't even start to show a rate cut anymore until June. So that means the market is pricing in no rate cuts for the March meeting or for the May meeting. The minutes will probably suggest that same thing, right? So yeah, there's not going to be a speech or anything. It's just going to be the Fed minutes. They'll release it. People will dissect it, and the market will react. But like I said, the market could literally be reacting to the minutes today. But yeah, S&P 500. Let's see, what do we got on Market Watch? It's a pretty good tool, Market Watch. I don't like the heat map. I would rather look at the index and the S&P 100. And it's pretty mixed. It's a mixed bag. You got 100 stocks, 101 of them are optionable. That just means that there's options on every one of these. These are the 100 biggest stocks in the S&P. So you don't need to do that S&P 500. You could just do the S&P 100. And literally, if you're going to have a downtrend day, you would want to see there be at least 80 stocks declining and 20 advancing, right? That would be correlation of a potential downtrend day. When you have a mixed bag day like this, almost half and half, the market could literally go anywhere. Walmart is having a bang of a day. Let's go look at Walmart. A banger of a day. They had earnings, that's why. Earnings this morning, and they beat. So all-time highs on Walmart. Do not short it. There is a split coming up, though. 3-1. That's not bad, but it'll make this cheaper. It'll make it cheaper. When they had this earnings, they said something in the news conference actually that caused the market to sell off. That they actually thought that they were going to have to guide lower. But ultimately, the market priced that move out, and you're back at all-time highs. So, good stuff there. You're down 37 on the CFDs. You're down 31 on the SPs. And the actual, I'll give you the prices here. You got 50.72 for the weekly expected move high. And then for the weekly expected move low is 49.38. Oh, look at that. All I got to do is click that and it pops up. Yeah, that's good to know. That's new. Thanks, Trading View. All right, so that's that. Is there any questions for me? Euro USD, Pound USD, if the dollar does put in a weekly, if this is the weekly low being set in for the dollar, then we would expect Pound and Euro to both roll back over. So if you want to jump in a short on these things, like on Pound, for instance, you still have a pretty decent entry. Still have a pretty decent entry on Euro. Just make sure you mitigate your risk. Make sure you don't risk more than 1%, right? You can see that I'm in this trade, so I don't always get them right, though. If you think I'm wrong, you could buy it. Hell. USD CAD is, it's a bit, they had their CPI today, Canadian dollar did, and they beat right here. So core CPI year over year down. That's a good number. Core CPI month over month up. That's why. That's not good. It's supposed to go lower. And this one, it ticked up. So that's okay. I see why Canadian dollar is getting beaten up. So since the Canadian dollar is getting beaten up today, even with a weak dollar, USD CAD is still up. We need the Canadian dollar to strengthen up or the dollar to strengthen up. But I can't buy this or short it. Oh, come on. There we go. So we're above the 50 on the RSI, which is typically, bullish, but it doesn't always stay bullish. It does look like it's losing any kind of bullish momentum it can get. But this thing has been in a long-term range, and it is choppy. Here's the month, right? I mean, just look at this. There's your monthly low. And that's the range you're in, literally. And we've been in this range since September 2022. We've been trading at these prices since September of 2022. That's crazy. Crazy. Yeah, long-term range. And then if you look over here, you got an even longer-term, bigger range. Pretty much stagnant. And I don't like trading stagnant things because it makes for choppy environments. So that's off the table. And then USD CHF made a fresh swing high and is pulling back as well, but it's at support. It's at support. I wonder if people are still overall long on this or if they're short. We'll watch USD CHF and see if daily support holds today. If it does, this might be something we look to buy tomorrow. Maybe a retest of it. Maybe you get a retest of it during London session tomorrow morning at 3 o'clock in the morning. If you close above this line today, I would be looking for a retest of it tomorrow for potential long. You got it right at this swing high. Literally right at the close. It's almost perfect. Not quite perfect, but almost. So has the SPOOs made a low of day? No, it's down lower, 41. Intraday, the SPOOS looks pretty rough. Yeah, that's pretty much a one-sided market. Bitcoin still has not made fresh low of day yet. You got all the way down here is going to be the low of day for Bitcoin. If it takes out the low of day. That's a big if. But it's trying to. And let's see if our point of control has changed. No, still the same. Actually, it did move. I think it dropped down one. We'll see what happens with it, though. What's the probability of that expected move? The probability. I'm not sure what you mean by the probability. It doesn't give you a probability. Essentially, it goes off of implied vol, right? So it was a $22 day. This is today's expiration. So today's expected move, this morning before the open, it was $22 based on the implied volatility. I don't know what you mean. What is the probability? The probabilities I would say is probably 68%. So like when you look at it on like a bell curve, all right, so like this is 100 and then this is 105 and this is 95. The probability 68% of the time looks like that, right? And that's always going to be based on that. So there's 68% of the time the market will stay inside of the expected move. And that's the best I could do for you as far as probabilities. I can pull up Tasty's bell curve on the SPX. But they have a different implied vol. Like right now on Tasty, for the same thing, you can see theirs is different. Their expected move is $18. Where on Thinkorswim it was 22. But anyways, let's pull up this and then I show you these lines. This line right here, this dotted line, that's the bell curve that I just showed you. So 68% of the time, the market will stay inside of this, right? Right there. And you can see the expected move actually falls a little bit short of that. Now, if we look at it on a bell, instead of this is the bell. You just have to picture it like this, right? Puts, calls. And then your 68, this dotted line, and this dotted line would be like there and there. So the market could bounce between the prices. And in this case, the market is trading at 49.73. So we'll just call it 49. You know what? I got a pen for this. Freaking use the pen. 49.73. And we could call this out here, this line. So let's erase this, and this. So in this case, on the put side, it's 49.50. And on the call side, see right here, 49.50. That's the put side. That's this dotted line. That's your 68% line. On the call side, it's right at 49.95. So that's where your dotted line would be. And the market stays inside of this 68% of the time. Hopefully that explains your question. Options are tricky and they're difficult, and people put, too much emphasis on them sometimes, and they try to make them much more difficult than they are. And a lot of people use options for betting, just, betting, going out here and just buying way out of the money stuff, expecting to get a big payoff when you can absolutely, why do I have two implied volatilities? Let's see here. In the money percentage. I would always look at the in the money percentage. You're never going to have better than a 50% chance, right? You're never going to beat 53% or 50% at the money, even on the put side. Right there. You're never going to get better than a 50% chance. And the further out you go, the worse your percent chance gets of it closing in the money. In the money. So literally when you take and buy beyond the first standard deviation, which this is considered the one standard deviation move, just going out one standard deviation and buying it, you have a 19% probability of it closing or expiring in the money. 19% chance. Not a very good probability. But there are strategies that we can do to, to make those probabilities better. One, but kind of strayed away from the options videos because they don't get not a lot of people watch them. So, I mean, you can see I'm in a TLT put and that can trade. I'm going to have to close it out too. Getting killed. Can was literally the same thing. It was just people were buying a whole lot of options at the $3 strike. And they did it, which I didn't like it, but they did it with an expiration of 13 days. 2 weeks. It's a 2-week trade. So those are probably going to close out of the money. But they did. A lot of people, there was a lot of calls bought by, well, it was one trade. It was over 8,000 contracts again. 8,000 contracts were put on at $3, the call, and they were bought. You could clearly see it, that they were paid for above the ask. And the way that I do that is simple. I go into trade, type in can, opener, and I ran the scan first and foremost. Like, let's run a scan. This is just, this is an unusual option activity scanner. All right. So you can see, like, this is the volume. and then it tells you what the asset is and then the strike. I look for these that only have one. Like I don't, because these are Feb 23. These are all this week expirations. So all of these 1, 2, 3, 4 trades are this week's expiration. Notice how this one is further out, June 21, and on AUR they 3.5. That's the strike. 3,300 calls. Right now, what we want to find out is, are they buying these calls or are they selling them, right? So now what we can do, we won't get a guaranteed. What was that? It was what? AUR. So we can go back into the trade tab, type in AUR. This trade was put on today. We go up, trade it at the bid or below. We can see that the total calls is 3,400. Notice how it is traded at the bid or below. You see this? You got 3,000 right there. 3,400 on that. And it was this expiration. And what was it? 350? Yeah, it was the 350. You can see it right there in volume. So going back, we know that they sold the calls. So we know they're whoever put on that trade. Wait, where is it at? Whoever put on this trade right here, right? Whoever did this sold them. And we could see that. We know for a fact that they sold them. How do we know for a fact that they sold them? Going back into the trade tab, you can see that between the market has how many? 41. Now, and then at the ask, which these are called buyers, right? You're always a buyer on the ask, you're always a seller on the bid. These buyers right here, and these are sellers. And these are people that we don't know if they're buying or selling because they traded in the middle of the market, in the middle of the spread. So like if the spread is 10 cents wide, they traded at 5 cents. We don't know if they were buyers or sellers of calls, right? But we can clearly see 3,400 calls were sold today. And then on the scan, we can clearly see that 3,300 calls were sold. So we would be short. We would be looking to do the same trade. But there wasn't much money to be made on that. Let's go back and look. 3.5. So it's this. There's only 25 cents. Or if we go in the middle of the spread, we could do it. Potentially, we could get filled at 30 cents. And how much would that cost? Let's go see. Oh, wait. It's AUR, not CAN. AUR. Oh, shit. Come on. AUR, let's go to trade. Let's go over there. And let's say sell in the at the midpoint, which would be 30 cents. How much buying power effect would cost? $220 of buying power to sell that call. So, I mean, $30 is the max profit on one contract. But he sold 3,300 of them. big trader. Big trader. So 3,300 times 0.35. Or wait, that's got to be 0.30. So 990. I did that wrong. I need to do 30,000. So 0.30 times 30,000. 9,000. I'm still doing it wrong. That's what he could potentially make on the trade. $9,000. It's a big account, obviously. Huge account. And like I said, we don't know, like we know that they sold the calls, but if we go look at the chart, AUR, first off, it's under $5, so it's a penny stock. He's selling the 350 strike right there, all H. That's where he sold the calls at. So this person thinks that price is not going to go back up there. Or this person is long this stock and they sold these calls to protect the downside risk. Which usually the better trade on that would be to buy puts. It wouldn't be to sell calls. Unless they, think it's going to go higher and they want to be put shares at 350, then, but usually people don't do that. But this person is definitely assuming that this is going to go lower. And that's for a long period of time. Remember, that's 122 days away. 122 days. That's a lot of time to set in that trade. A lot of time to set in that trade just to make a little bit of premium. It's a very weird trade. Could be the owner of the company for all I know. But that would be insider trading. Pretty much illegal, I think. But yeah. That's the unusual options activity trade. That's how I make analysis on an unusual options activity. Because somebody knows something generally when they put that much money up, right? They know something. They did their due diligence. I guarantee they did their due diligence before they put on that size of a trade. Because that's big money. The buying power alone for 3,000 of those things would be crazy. Let's see what the buying power would be on 3,000 contracts. Oh, I'm not even going to be able to do it. I can't. Yeah, I'm not going to be able to do it. I can't just type in 3,000. Anyways, it'd be a very, very, very big buying power. But the implied vol also out there is 86%. So they're just basically selling the 86% implied volatility. And they had to be pretty damn certain because that's pretty close, right? That is pretty damn close. I don't know how big the share floats are on this. We can check that out. If it's a low float, you definitely don't want to do it because low floats, it's not a low float. There's over 1 billion shares outstanding. And the short float isn't that big. But still, that's a long time to set in a trade just to make $30 a contract. All right. Thanks, Heath. Have a nice day. You too, buddy. I bet you've never been in a hotel room licking maple syrup from a plate before. I'm not really big on maple syrup. I do like pancakes and waffles, but I put very little syrup on it. But you're right. I've never been in a hotel room licking maple syrup off a plate. You should do more research on the indicator you were using. What indicator are you referring to? The 68%? I mean, yeah, no, I know that for a fact. It's not, I mean, it's 68% probability that it stays inside the expected move. But like in trading, nothing works all the time. You can simply just go back and look at how many times did we breach the expected move. Well, I just started keeping track of it over here myself in December the 19th. All right. That's when I started. So I can't go, I'm not going to go back in time, but I'll just continue to go week by week this way, and then I'll have a lot of data. But you can just simply look and see. There's the top. You traded right up into it and then reversed down hard. So you stayed within the bottom and lower edge of the expected move. Here is another one where you stayed within the bottom edge and lower edge of the expected move. Here's one where you breached it. So let's just do that. Let's use the yellow paint for when on the breaches. There's a breach. This is a breach, but it did not close above, so it does not count. You opened above it, but you immediately fell right back into the range. Same goes for here. You fell outside of it, but only for a brief moment, and then you traded right back up. And where did you trade to? Bingo, the expected move high. All right. Continuing on. Did not breach here, did not breach here, did not breach here, and we breached here for 1 day. You closed below for 1 day. The second day, you traded right back up. So just with these amount of that I've got on here, these weeks, you only breached and closed below the expected move twice. I'd say that falls within 68%, don't you? Would you not agree? Now, obviously, 68% isn't 90%, or it's still a low probability. 68% of the time, you're going to stay within inside this expected range. But on like very high volatility days, like if you get the VIX exploding to the upside, then obviously you can breach this thing heavily. And I can show you that by pulling this up, going to charts, typing in SPY, make this chart big. Now this indicator is not perfect, but it's the same concept. You can see there was a pretty sizable breach here to the upside. Pretty sizable breach there, but remember, this one isn't perfect. It's not perfect. It's not exact. The way I do it is exact because I'm literally getting the close on Friday. This is just a year. Here was a significant breach. See that? There's the low. Boom, boom. Huge breach. That's a high volatility week. So you're not going to stay within the expected range given high volatility. Let's go 3 years. And let's find the bear market. Look at this one. Look how wide that expected move was. Market pricing in a ton of implied volatility there. This is the breach here. Look at that breach. That's a 2 standard deviation move outside of the expected range. That's a lot of bloody volatility. That is also when we were having a bear market. You know what I'm saying? So you opened well outside of the expected range on this day, but traded all the way back up in it. But you can see breaches. This is the SPY, though, not the SPX. But they're pretty much the same thing. Yeah, pretty much the same thing. You don't have to look at it or even put it on your chart. I do it for the people that like it and use it and know, hey, I don't want to necessarily take a short down here. Why not? Well, because the last time it got under the expected range, if I shorted it, I was a huge loser for the rest of the week as it blasted right back to the upside. Where were we on the RSI? Not even nowhere near under the 50. Where were the moving averages? I mean, yeah, there's no way. Your moving average structure is bullish. Your RSI is bullish. You're trading down to the top edge or the bottom edge of the expected range. That's not a sell. That is a buy. Right? But you're still going to be wrong sometimes. You're still going to be wrong sometimes. Nothing works in trading all the time. Those drops are pitiful. Give me 100K dump for Bitcoin. Yeah, Bitcoin is starting to get a little bit of a move going here. Oh, yeah, I mean, nice trade there. We're sitting at 36% on the plus. And that's with this correction here. That's on 25x leverage, though. It's a nice trade to the downside. But we still don't have, Euro is correcting a little bit. Nice. So won't it be nice if we go for the rest of the week and just trade down lower, 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 lower all week long? We will have pretty much nailed the top of the week on the Euro short and the Bitcoin short. I can't get long S&P 500 yet because we are not anywhere near the weekly expected. Now, I could potentially get long based on the daily expected. The daily expected is $22 and we're under it by 10 points. So I could get long right now expecting this thing to move up 10 points to get back to the bottom edge of the expected daily range. Will I be right? I don't know. But it could be a trade. On the futures grid, let me see. All right. On the futures, you're trading at 49.89. So I could potentially get long here and get out of the position if it gets back up to 5 grand. That would be a 11-point move on the futures, which would put you around the bottom edge of the daily range or the daily expected move. You've already breached it, so there is potential for more downside. But that's a pretty big move, given the week is only expecting a $66 expected move. You did half of that already. And today's the first day of the trading day. So, yeah. You get what I'm saying. Hopefully. I think you could see a 10-point bump. The problem is the risk. I would have to risk the low of day, which is 49.81, or 49.82 is the low of the day on the futures. So that would, like, almost where price is now, that would literally be, let me show you, that would literally be a 10-point stop. There's the low of day. And like I said, if we're expecting the price to trade back up to the bottom edge of the expected move, that would be around $5,002. So right in there, that would be your take profit. But you would have to risk 10 points to make 10 points. Not a very good trade. Would have been better to do it 20 minutes ago when it set the low in. Right there. But we just didn't. Because I don't like to do that either. I mean, I don't, yeah. If we get down around the bottom edge of the expected or something like that, then I'll potentially look for long entries. 21 exponential moving average coming in right around the bottom edge of the expected move. And you clearly got a little bit of bearish div going on there. Where's this close? 50.26. 50.29. So that is a higher close. That is a lower. You do have a little bit of bearish divergence going on from this to this. Bearish div. But, I mean, the asset is obviously bullish. So if we get down around this level in here somewhere, I might look to buy some calls or put on a put spread as long as the skew will work. I haven't checked the skew. Let's go check the skew. Yeah, we still need the skew to dip a lot more. But I do like the fact that it is coming off. The VIX is going up, but yeah, volatility does look like it's trying to bottom out there, doesn't it? Oil's getting crushed. It was up on the day, traded right up to our resistance of 78.47. Look at that. Look at that. Look at that. Damn it. Oxum, why didn't you tell me we were testing resistance, bro? Oh, that was at 3 o'clock in the morning. That's why. 3 a.m. London Open. That would have been the sell trade on oil because oil still has a bearish structure. Not on the RSI, but on the moving averages. You're still in a bearish structure. Your 200 is still above the 100. The 100 is still above the 50. That's bearish. This whole entire move is potentially a bull trap. Potentially a bull trap. Art, AKT, and OP not even flinching at this move. I don't know what those are. Yeah, no, it's barely down on the day. And then what was the other one? OP? Yeah, it did. It took out yesterday's low, but it's right back to the open. I've never heard of either one of those projects. But yeah, they're not really down. Lots of alts finally taking a breather. Lincoln Sol getting hit harder. Link. Yeah. That's a pretty vicious move down there on Link. And Sol was a big runner, so it's not getting crushed. Well, it's down 4%. Let's see if we have any big movers. Alice down 6%. API 3 is down 7.8%. There's a 5% down, 5%, 6%, ENJ. I don't have all the alts on here, obviously. GAL USDT down 8%. We got almost 7% down on Mask, 6% on Near, 11% down day on People. That chart is disgusting. How do you even trade that, man? Woo! So I would basically watch this price here. As long as you don't close the daily back above that, you could potentially look for short side entries. But it's bullish. It's just now coming back down to the 50. So you got to wait. You got to get some closures under that. Get some closures under that, and then we could think about it. Rose is down 8%. Data is down 7%. Taking out yesterday and the previous day's lows. And that's pretty much it. Yeah, we could look at Bitcoin dominance, see where it's at. Yeah, it's up a little bit. It looks like a freaking covenant handle. Cup hasn't made a handle yet, but the rounding bottoming formation is in. Just need the handle now. Little dip here and then look for it to move higher and then also get crushed. Maybe. I mean, sometimes they trade right with Bitcoin. Sometimes they don't. Some of them do. Some of them don't. It's just, it's all in. It's all in the asset. But that's where we stand today. Pretty much. We got 2 trades on, both of them working. nicely. Well, the Euro trade could be working a lot nicer. It's actually not working yet, but it may work. I do like this hourly move here as long as it can stay lower. Taking out the low. I'd love a close under this candle's low here. That would be fantastic. And then I definitely want to see a close under this candle's midpoint. And then we'll be in like Flynn, more than likely. And you've done that on Bitcoin, essentially. Like, right? Didn't quite take out the low of day yet, though. There's your low of day on Bitcoin. Got close. Got close. We'll see how it closes. Most of the top gainers are down. AVAX Vet near. Yeah. Hey, Brandon, when are you going to make more videos? Yeah, I was wondering about that too, Brandon. What's up, bro? You kind of gave up on your channel. He's mostly on Twitter, I think. Whereas I'm mostly on YouTube. Less on Twitter. I am on Twitter, but I don't post often as I should. I will start posting more. Can I look at ALCX on Binance? Yeah. It looked similar to that one that we looked at. You're still in an uptrend on it, but that's a pretty nasty looking pullback there. But I mean, you've started to go up now. This could be a bottoming formation, or it could also be a lower high. Yeah, it would be the same thing for me. I would more or less need this thing to get under the 50 and then come back for a test of the 50 from underneath the 50. So, and I would want it to be retesting that resistance. So I'd want to see this thing continue to make its drop and then close. So today would have to come down lower and close. Then I would want to see it retest the 50 from underneath like that, and price doing the same thing like that. And then that's where I would put the short position on. I can't sell it right now because they can still get bought up. You can see a test of 50 there, test 50 there. And then ultimately the break. That's right through here. So I can't really get bearish on it just yet. The only reason I got bearish on Bitcoin was because it took out last week's low. Or last week's high, sorry. And I know that, Tuesdays and Wednesdays are good days to put in lows or highs on weekly candles. So the S&P could literally be putting in the low of the week right now. Right? DXY could be potentially putting in the low of the week right now. Potentially. Yeah. Okay. Potentially. But like I said, I own Bitcoin. I own a lot of it. So the little short position I took is nothing in comparison to the bags that I have. I like to trade it to make more. When I make more, I just deposit my winnings into the wallet and grow the wallet. Keep growing the wallet. Keep growing it. And I'm literally not spending any of my money to do it. It's great. It's great. I don't have to buy any Bitcoin. I can literally just trade my way into owning it. And you do that by taking profits on your winning trades, moving your stop to break even, and see if you get more out of it or not. In an uptrend, if you take a down position, like a short position, you definitely want to take profits. This thing has been uber bullish for a long time. For the last 5 days, it hasn't been, but the days leading up into it, it was. That's a huge move to the upside. That's almost $1,000 candle right there. Pretty good sized move. All right, we're going to wrap it up. Cracking open a beer in the morning. Nice. No, that's a V8. If I had a camera, I'd show you. I like my V8s. It's a small can. It's an 8-ounce can, or 5.5 ounce can, sorry. Get some vegetables in me early in the morning. So I'm saying that I'm stacking sats. Yeah, exactly. I am stacking sats without buying them. And that's the best part. I'm not buying them. The market's literally just giving them to me. Sometimes the market giveth and the market taketh away. Everybody knows how that works. I actually shorted a call on Mara, $31 call, and this freaking thing the other day traded right up, or no, it was a $28 call. And I had to bail because it got above $28. It was on this day right here, I think. Where it got so close, I was like, I'm not trusting it. This thing moves, man. It moves, dude. All right, we're going to wrap it up. You guys have a fantastic rest of your day. I thank you so much for your time. Didn't stay below 20K long. Bitcoin? No, it did not. No, it did not. I mean, it stayed down there for a few months, almost a half a year, but it got right back above it. Came in for a retest of it right here and said, see you later. I would love for it to stay well above that price for the rest of its life. I mean, this thing is, I never thought it was going to get that high, honestly. I thought a retest of that monthly support, that was going to be the end of it, and it was not the end of it. Not even close. I mean, this is the monthly support in question. It blasted right through there. The first month, it just retested it and closed under it. Barely under it. And then the second month, up. 1, 2, 3, 4, 5, 6 months of straight upside. There should be a pullback soon. But it's got a lot of bullish momentum based on the ETFs and based on the fact that the halving is so freaking close. Look. This month, next month, and then boom, we're there. It's insane that we're talking about the next halving when it seems like just yesterday we had one already. That was 4 years ago. It's just odd to get this kind of upside before the halving. You know what I mean? Especially coming out of a bear market cycle. I would have thought more sideways like this. Sideways grinding action into the halving and then get the breakout. right there. Boom. All right, we're gonna kill it. You guys have a fantastic rest of your day. If as long as the internet gods permit, I will be live Thursday. We'll see you then. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody. Any change we could look at coin real quick? Yeah, we'll do that, and then we're done. All right, so coin testing monthly res. I don't have it drawn up there, but the yearly open, the 2024 yearly opening range is close enough. I mean, it is pretty much monthly res. Yeah, it made fresh yearly highs Friday. Unfortunately, after making those fresh yearly highs, it was a sell-off day. So yeah, we this thing could be getting ready to pull back for a little while as well. Unless it finds support. You do have a daily support setting right under you at 165-ish. And then another one at 141. If neither one of those hold, then there's a good probability you're probably going back down to 117. So I would just watch that area and this area. You're so close to this area though already. And this move here did hit overbought. So a pullback is, normal. It's still structured bullish. Yeah, I would probably like a retest of 141 better and then build in support there, and then you could potentially look to get long. That's only if it builds in support. If it doesn't build in support, like trade around this price for a few days and then start to trade back away from it, then I would leave it alone. But you got a lot of support under that via moving averages. But I wouldn't be a buyer right now. I don't think I would even be a buyer at this price here. Coinbase did have good earnings. I know that. I mean, look at that. That is crazy. That's got to be wrong. A 4,638% surprise. That's got to be wrong. 15.46. That's crushing earnings, and it didn't get a very big bounce. A $20 move to the upside, and then it just immediately sold off. So just keep an eye on this area here. It could build in support there, but you're still pretty overbought. I like 141 better. All right. We'll wrap it up. Thank you all so much. Trade safe, guys. We'll see you Thursday morning.